Yeah, well, we had great meetings with the Democrats in the Senate and on the Republican side today. And the good news is that there's strong bipartisan support and will to get this market structure legislation done. It's important for America, and then the 50 million Americans who've used crypto want to see it get done. And so one date we heard floated was let's try to get this markup done before Thanksgiving. I think that there's 90% of the issues are already aligned on and agreed, and there's draft text going back and forth, a lot of great cross-functional collaboration happening. That last 10% are the remaining issues, and everyone committed to get in the room together and work it out. And hopefully we'll see some draft text or get it out of committee by Thanksgiving.
Hey, what's going on, Bull Runners? Welcome back to the channel. Ryan Huggins here, aka Win with Ryan. Imagine waking up to see that Bitcoin crashing below $90,000. All of your 2025 gains are completely wiped out in just weeks. The entire market bleeding red, liquidations piling up, and everyone is asking, is this the end of the bull run? But what if this exact chaos is quietly setting up for the biggest opportunities we've seen all year? Things that could change everything for coins like XRP or even how you hold your crypto long term. Stick around because for the next few minutes, we're going to be breaking down the real stories behind the drop, the one altcoin that's fighting back hard right now, and the new tax move that could hit your wallet sooner than you think. Plus, we'll head over to X, find out all the breaking news that's happening on X today. We'll head over to Forex Factory and check out all the red folder news that you need to know about this week. Will all the ETF launches save XRP? The IRS is looking to take your money no matter where it's stored. And at the end of the video, we're going to be jumping into the charts, looking at the spider lines for XRP, and we're going to be looking at very, very important levels of resistance and support that you need to know about today. Plus, we'll be looking at short-term and long-term momentum. And you're a genius for being here in the first place. But if you're like most people where you don't have the opportunity to spend hours a day doing crypto research like we do for you every single day, just go ahead and subscribe to the channel right now. And if you are still feeling bullish about this current bull run, let us know by commenting 777 down below. Checking in over at CoinMarketCap, looking at the overall health of the crypto market today. We are currently trading at $3.15 trillion, which is up 1.24% in the last 24 hours. We have had $204 billion worth of trading volume. Fear and greed index remains in extreme fear right now, 16 out of 100. Yesterday was a 15. Altcoin season index continuing to basically trade sideways since it got down into these 30 levels back in the middle of October. 31 out of 100. Bitcoin dominance does continue to drop, now sitting at 58.3%. Bitcoin ETF tracker unfortunately continues to give us bad news. Today, $254 million worth of outflows. You can see the volume has just been flowing out like crazy. When you take a look at the weekly opportunities here, last week, we were minus 1.1 billion. And this week, just getting kicked off, we're already at $250 million to the downside. Ethereum is actually experiencing more of an exodus, $182 million worth of outflows for Ethereum. On a percentage basis, this is an extremely bad scenario. As we take a zoom out on these as well, last week, 728 million. Already this week, 182 million. So the volume obviously looking very, very bleak right now when it comes to major ETFs, which obviously translate into the actual coins. Top 6 cryptos by total market cap today. Number 1 is Bitcoin at 92,586. Number 2, Ethereum at 3,100. Tether at number 3 at $1. XRP at number 4 at $2.21. BNB at number 5 at $931. And Solana at number 6 at $141. Taking a look at Forex Factory, red folder news came out today. Our job unemployment claims are currently sitting at 232,000. There was no forecast because of the fact that the government has been closed. Unfortunately, could not get that number in time. Previous, though, was 219,000. Things to keep an eye on in the upcoming days. FOMC meeting minutes does come out tomorrow morning. And then, of course, non-farm employment change and unemployment rate will be hitting us on Thursday. Heading over to X to get the breaking news. Coinbase CEO says live on CNBC that Bitcoin and crypto market structure bill is on the verge of passing. Now, if you've been following along, we've been following this very, very close because it is going to be important. Once clarification comes in, will that help revive the market? Because right now, people are still uncertain. We're even going to talk deeply about this White House reversing the IRS scenario for overseas crypto storage, which could be a very, very big problem for massive players. But this bill should have already passed. However, the Democrats did try to rewrite it in the last moments, trying to really stifle the innovation capabilities of crypto. They don't want to allow, because of the big banks. It's not Republican or Democrat, right? The big banks are what stepped in. The lobby said, hey, we do not want crypto to be able to give out interest on any of their holdings, because then that would take away our proprietary information essentially. So we'll continue to keep you updated on this. Positive news that did come in. Bitcoin CME gap at 91,000 to 92,000 is officially filled. We'll take a look at some more gaps called fair value gaps once we get into the charting for XRP and Bitcoin. So this is actually a really positive sign, a potential rallying cry from this point on, but there are so many other factors right now that are not really positive. So we'll continue to follow up on that. MasterCard has teamed up with Polygon to make crypto transfers way simpler. You can now send funds to usernames instead of long wallet addresses, which is a very, very positive thing. And as we know, XRP also partnered with MasterCard. And breaking Trump's $2,000 tariff airdrop will be happening mid-2026. Now, this is an interesting way of putting it, right? We know that the tariff refund, or as he's calling it, the tariff dividend. Now, first off, if you use the word dividend, it means it's going to happen multiple times potentially. But I like this tariff airdrop, because what if this was the way to get every American to use a crypto wallet, right? Hey, if you want to be involved in getting this $2,000 that you're eligible for, you need to open a crypto wallet on Coinbase or on Kraken or on whatever website, and we'll feed that money into your wallet address. That would be an interesting play there. Not sure if that's what's happening, but that would definitely signal a rally for the markets. But what's interesting here, the timing is perfect. He's basically going to drop the $2,000 right before the midterm elections, aka basically bribing people to vote for Republicans. So XRP traders hope that fresh wave of ETF launches will restore the bull trend. Now, as you know, we've seen the ETF for Bitcoin and Ethereum at the beginning of this video not looking good right now. It's a bunch of outflows. You have to remember that ETFs are designed to make money. So first and foremost, obviously the companies do have to buy a bunch of crypto at lower prices. When prices go up, then they sell them. That's why, as you know, with the ETF launches for Bitcoin and Ethereum, they were able to get into those much lower at prices. So they're able to sell those and make profits for their clients. And then they're going to rebuy those. And when it goes up again, they'll sell them, because a hedge fund where the ETFs are being sold out of is not designed to buy and hold long term. But a handful of XRP ETFs could launch this week, leading traders to predict the start of a new rally. But the desired bullish momentum is dependent on the altcoin holding above $2.20. And it is currently holding literally at this moment, $2.21, which is possible. XRP is set for a landmark week for spot ETF launches, which could unlock billions. We haven't had the billions of institutional inflow ever for XRP. Now it will be unlocked after finding support at 220. XRP traders are hopeful that the ETF launches will serve as a perfect springboard for the rally towards 260. And what is interesting when you look at the charts here for XRP, it's held up significantly better as of recently. Like, look at this. These are 1, 2, 3, 4, 5, 6 weeks right here. We were actually in these levels of 250. We're only down to 220. So it's a 30-cent drop over the last 5-6 weeks for XRP. But let's look at Bitcoin. It has absolutely been ripping to the downside. So XRP is holding up strong right now, which is very positive. And what we have launching today, Franklin Templeton, they have officially launched a $1.5 trillion asset manager, launched their ETF under the ticker EZRP, potentially driving significant institutional inflows despite bullish price projections of $7 to $24 from the ETF demand. XRP traders at $2.60 amid whales selling off of 200 million tokens. And then we also have the 19th to the 20th. Bitwises could launch this week, and we have 21 shares that could launch, and we have coin shares that could launch. Then the following week, Grayscale, Wisdom Tree, and potentially people still want to see and hear from BlackRock. Are they going to launch theirs as well? The CoinGlass liquidation heat map shows the price is eroding liquidity around that $2.20 level, with large clusters asking between 234 and 241 and 267 to the upside. So you can see right here, 234, 241, these big bright green levels, and then this one right here looking really juicy for us, just above 260. And then we even have one up here, like I said, this one's a little lighter, but it is at 267.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test, and you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund, and one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with six figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click start trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout. And if you skip it, you're leaving 10% on the table forever. So it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.
So the White House, working with the IRS, may be coming for your foreign crypto accounts. They would like to deter Americans from moving their digital assets to offshore exchanges. They're creating a crypto reporting framework, which would provide a tax department with access to Americans' foreign crypto account data. The broker digital transaction reporting would put U.S. crypto tax system in line with 72 other countries that have committed to implementing CARF by 2028. In late July, the White House's crypto policy recommendations report stated that implementing the CARF would discourage American taxpayers from moving their digital assets to offshore exchanges and thus not put U.S. crypto platforms at a disadvantage. CARF was established by the Organization for Economic Cooperation and Development in late 2020 to enable member nations to share cryptocurrency data for the purpose of combating international tax evasion. And the US is going to roll out tougher local crypto tax rules in 2026, which will require US-based crypto exchanges to report more detailed transaction data, including both inward and outward transfers. Clinton Donnelly said, right now, the IRS doesn't have instant visibility into everything you're doing on the blockchain. However, that's about to change. A few years down the road, with better tools and better data integration, they'll be able to scan blockchain networks at scale to identify major non-reporters and target them for audits. So as we've been talking about, as far as them being able to scan and find and this, that, and the other, this is the other thing that people are actually worried about. This is the Terminator scenario where the government is going to be able to find you. If you've seen the movie, The Terminator, they're going to be able to come after you with Skynet. They're going to find you and they're going to say, oh, you have a parking ticket, sucking your money right out of your account. Oh, you did this that we didn't like. You spoke out against the regime, whether it's the Obama regime, the Trump regime, or whatever the future regimes come out, you start to speak out against them. They turn off your money. And that is why a lot of people are worried about going to 100% digital crypto, with the fact that it's tracked by digital IDs and wallet IDs, because there is no hiding. There is no getting away. So we're going to become crypto, and then you're going to have other people exchanging with gold and silver, I guess. All right, so let's take a look at XRP in the charts today. Yesterday was another lackluster day. It did try to push to the upside. We did have a green candle. The new daily candle has just launched. We have 22 hours, 53 minutes left in that candle. Down to the downside, we do have a support at our 1100 exponential moving average on the daily at $1.51 now. It is climbing up slightly. When we drop it down to the 12-hour chart, which is where we really see a potential of a support off of the 1100 exponential moving average, that's coming in at $2.03 now. As we checked just the other day, we checked on the 11-hour for this, and we did lose that 11-hour. Now, it is hovering around like it has before in the past. But right now, the moving averages are also starting to slope below there. The 10, the 30, and the 50 looking a lot more bearish, unfortunately. We do need to see a rapid recovery to the upside to prevent that from happening. Literally right now, the 50 exponential moving average will be crossing over the 1100, indicating a bearish momentum on the 11-hour here shortly. Then there is more of a possibility of coming to the 12-hour, which is at $2.01, $2.03 level. And the reason why I give you that information is because if we look at Bitcoin, Bitcoin right now is literally bouncing off of the 12-hour 1100 exponential moving average. So that is our line of defense that we're trying to hold right now, which is 91,500 essentially. If we do lose this, there's a possibility coming down into the next level of support, 86,000. As we talked about the other day, when we take a look at this on the daily chart, we can see that line has smoothed out significantly more. So that means that that line is going to be even a lower level. So we were hoping that it would kind of, if price continued to drop, it'd run into this line here, the 1100 exponential moving average. But now, if we take that same line and we project it into the future more like this, that's kind of the trajectory that it's running at. If price were to come down to the 1100 exponential moving average, we could see it coming into this level, maybe tapping that around December 10th. It could obviously make it quicker, but the reason why I mention that is because I want to keep it within this box here. So right here is December 9th. If it take that time to get there, and that's what we were talking about the other day with price coming down. Now, there is a possibility that we talked about as well with price, the green line going up and breaking back above the 10 exponential moving average, which is currently sitting right here, 96,500 on Bitcoin. It needs to make that turnaround and go in that direction. Short-term momentum is zeroed out. Mid-term momentum zeroed out. Long-term momentum bearish, red. But it's deep, deep red. So there is a potential of returning back to the upside. Weekly, short-term momentum bottomed out. Mid-term momentum bottomed out. Bearish, bearish. And this I don't like. This is what we've been talking about for the last couple of weeks because it was on its way to this. But once this candle closes in 4 days and 23 hours, we will officially have passed into bearish territory on our Wolfpack indicator. Now, that doesn't mean that it's official bear market for long term, because there's a possibility where it does one of these little quick dips like it did here, quick dip and rip. And let's look at this pullback here, by the way, because this one was from, let's go right here. It's where it broke. That was an additional 26% to the downside. Holy moly. Okay. So let's also measure from that top to the break, from here to breaking through just here, a 45% drop before it actually broke this level here. Let's look at where Bitcoin's drop has come to now, from the top to where we're sitting, 28% to here's 32 to here's 36. So what we saw when the last time that this dipped and ripped, as opposed to going bear market territory, the dip, it actually did last a couple of weeks regardless. But what we see is it got down here and our short-term momentum immediately spiked back up. So what we need to watch for right now is our short-term momentum regaining that strength to turn around long-term momentum. But right now we're reading bearish. So that is what it is. Unless some amazing news comes out from Trump, we're not looking fantastic as far as sentiment goes in the market. Flipping back to XRP, same scenario here. Long-term on the daily, bearish. Weekly chart also just flashed into the red. Last time XRP was in the red was from April 8th until it finally broke out into August 19th. The time before that was from December 20th until March 20th, 2023. December 20th, 2021. It was 2 years under that level. So it is imperative that it immediately turns around. We need a market turnaround for crypto, or we could be going bear market. When we're looking at these charts here, this is our spider lines chart. We can see that unfortunately Bitcoin, or XRP rather, did drop below our spider line here, $2.28. This is a spider line that comes to us all the way back from the drop of January 22nd, 2018, with the pivot point of the high of 2021. Draw it out in the future, boom, that's a support or a resistance. Now, unfortunately, we dropped below it, so it's going to be resistance until we can battle back up. The next level of spider line support is actually down here at $1.90. And it was a support here, April 7th, 2025. Also here, June 16th, 2025. So watch for $1.90 support, resistance, $2.28. Then the next resistance is going to be up here at $2.60. That's what I'm watching for on XRP right now. And I will also continue to watch the momentum lines as we continue to follow along. So if this was helpful for you, make sure you subscribe. Smash that thumbs up. Also, if you want to know what settings I'm using on these indicators, it's the STC, or shaft trend cycle, length of 10, fast length of 10, slow length of 30. And then I'm using the Wolfpack indicator down here, which is fast length 10, slow length 30. So if you want to learn how to day trade, check this out.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent. That's your groceries. That's an emergency fund. And one bad trade or black swan event, and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival. Whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with six figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click start trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout, and if you skip it, you're leaving 10% on the table forever, so it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.